Artificial intelligence is the hottest gold rush since the internet boom of the 1990s. But here's the problem. A flood of capital is chasing tiny pools of revenue. In 2025, AI startups captured 64% of US venture capital and 53% globally. Big tech is on track to spend $400 billion this year on AI infrastructure. Meanwhile, 70% of funded AI startups have no real revenue. Are we building the future or inflating the next dot-com bubble? In the past 18 months, AI has gone from niche to Wall Street's obsession. Pitch meetings are packed, talent wars are raging, and seven-figure compensation packages for elite engineers are no longer rare. Headlines scream record funding, and AI's share of global venture dollars has never been higher. But behind the glossy pitch decks and flashy demos, many AI startups are burning cash. High compute costs and low margins make some businesses look more like services than scalable software. Some even lose money on their heaviest users, inference whales, when flat-rate plans collide with sky-high usage. Winners and losers are already emerging. Winners, GPUs, cloud platforms, and data centers. Losers, most AI apps, at least for now, until they prove durable margins, not just growth. Unlike the dot-com era, today's AI surge is colliding with physical limits. Data center power use could more than double by 2030, to roughly 945 TWh, about as much electricity as an entire advanced economy consumes in a year. And cooling these facilities takes millions of gallons of water per day across regions, fueling local pushback. The costs of the AI boom aren't just financial, they're environmental. AI is also transforming the job market. Klarna's AI assistant replaced the equivalent of 700 agents. The IMF estimates around 40% of global jobs, and 60% in advanced economies, are exposed to AI. That exposure can deliver productivity gains of 12% to 56% in some fields, or bring the risk of displacement when companies automate rather than augment. Under the hood, unit economics will decide who survives. If you rent models via API, your cost of goods sold rises with every single query. If you run your own stack, you're staring down hardware, power, cooling, and expertise costs. Investors are recalculating true gross margins, pulling hidden compute out of R&D and into the light. In a gold rush, the safest money often goes to picks and shovels. Here, that's GPUs, high bandwidth memory, cloud capacity, electricity, and data center real estate. It's where a huge share of early value is accruing, and it's why big tech's AI capex is exploding. There's another twist. Open-weight models like Llama and Mistral are getting very good, and many are free to run locally. If good enough open models keep narrowing the gap with proprietary systems, moats at the app layer could shrink fast. All this is unfolding amid regulatory pressure and public skepticism. The EU AI Act is phasing in, introducing bans and transparency rules in early 2025, obligations for general-purpose models later in 2025, and full high-risk system requirements by 2026-2027. In the US, rules are still evolving, but buyers already demand governance, safety, and compliance before signing big deals. Meanwhile, market volatility in productivity gains, valuations, and risk appetite keeps everyone guessing. So, bubble? The parallels to 2000 are hard to ignore. Massive inflows plus no profits equal sign risk. Some companies have real revenue and impact. Many are pre-profit and some are pre-revenue despite sky-high valuations. If infrastructure bottlenecks, power constraints, or investor sentiment turn, a shakeout could come quickly. History doesn't repeat, but it rhymes. From here we could see three paths. A soft landing where prices fall, margins rise, and ROI becomes clear. A shakeout where many app layer companies vanish and value consolidates in infrastructure and a few platforms. Or a boom-bust-boom cycle where a correction clears the hype and the strongest players lead a second, more durable wave. Is this the next dot-com bubble? Or the messy birth of a $7 trillion transformation by 2030? The truth is, it could be both. The wreckage will be real, but so will the breakthroughs. The winners will be the teams that turn compute into cash flow, earn public trust, and build products customers can't live without. If you found this breakdown useful, subscribe, drop a comment with your take, and share this video with someone following the AI gold rush. The next chapter is being written right now, and you'll want a front row seat.